Then came hot July, boiling like to fire, that all his garments he had cast away. So wrote the poet Edmund Spencer, and yes, the jacket's gone. It's Monday the 11th of July and summer is well and truly underway. But Atlantic capital markets are still here as always, with our Monday morning roundup of the coming week's economic highlights. As always, we'll start with a quick rundown of the key economic numbers being issued this week, and we'll then dive into some of the more important stories afterwards with our own thoughts and analysis. So without further ado, let's get straight on with it. So the economic numbers being issued this week start on Tuesday in Germany with an update on their economic sentiment index. Wednesday is a very busy day this week, with interest rate decisions being taken in both New Zealand and Canada, plus the release of the latest GDP figures here in the UK and an inflation update in the US. And we'll cover each of these key stories in detail in a moment. On Thursday, we'll get an update on the unemployment situation in Australia and the US jobless claims. And finally, on Friday, it's China's turn to release their latest GDP figures, and that's something that we'll discuss later on in the video. Also on Friday, the latest US retail sales figures and the US Michigan Confidence Index. And the companies that we'll get updates from this week are as follows. On Tuesday, we'll hear from Grafton and PepsiCo. Wednesday sees the release of half-year results from Wetherspoon and Q2s from Delta Airlines. And we'll take a look at both of these companies in more detail straight after this. Also on Wednesday, we'll hear from Tullow Oil. Thursday brings results from Ashmore Group, Barratt Development, Rio Tinto, Morgan Stanley, and also on Thursday, JP Morgan released their Q2 results, and we'll give our thoughts on this towards the end of today's video. And finally, on Friday, we'll hear from Burberry, Wells Fargo, Citigroup, and United Health. Well, after a dismal first half to the year, investors are assessing whether the US economy can avoid a recession and are weighing up how deep a recession in Europe just might be. Whilst the US jobs market remains strong, there are questions as to whether US earnings will be able to live up to expectations. US earnings season is due to kick off this week with US banks. However, US inflation, UK GDP and rate decisions from both the Reserve Bank of New Zealand and the Bank of Canada will be in focus before the US banks report. So let's take a look at this week's key stories in more detail. Well, we start on Wednesday, a very busy day for the markets, and it starts with interest rate decision day in New Zealand. Well, the Reserve National Bank of New Zealand's aggressive approach to hiking interest rates isn't expected to change anytime soon. The bank hiked rates by 50 basis points in June and is widely expected to raise them again by a further 50 basis points in July. This would take the cash rate to 2.5%, and with peak inflation still appearing to be some way off, interest rates could rise to 3% by August. Despite the aggressive stance from the bank, the kiwi has come under pressure, with New Zealand dollar against the US dollar falling over 5% since early June. And on the other side of the Pacific, Canada is also due to release their latest interest rate decision, and the bank survey showed that inflation expectations in Canada continue to rise, piling pressure on the bank to announce another outsized rate hike in July to prevent consumer price growth from becoming too entrenched. Well, the bank raised rates by 50 basis points in June, the largest single hike since 1998. The market expects another 50 basis point rate hike in July, with expectations rising. The bank could consider a 75 basis point hike. And despite the bank aggressively hiking rates, the loonie has fallen versus the stronger US dollar. The USD CAD pairing has risen over 2.5% since the start of June. And here in the UK, we'll hear the latest GDP figures. The UK economy has stalled in recent months. GDP contracted by 0.1% in March, and the economy contracted 0.3% in April. Now, whilst this was disappointing, it wasn't owing to a slowdown in consumer spending. Instead, it was due to a reduction in virus testing and vaccination programmes. As a result, the May reading could show a modest improvement. Even so, the growth outlook remains weak, with inflation set to rise and dent consumer demand further in the coming months. So do keep an eye on the pound and the FTSE this week. And also on Wednesday, Wetherspoon are due to release their half-year results. With lockdown restrictions well and truly in the rearview mirror, Wetherspoon's has improved sales slowly. In fact, like-for-like sales in the last few weeks of the third quarter were slightly positive. Investors will be keen to see whether this trend has continued into the fourth quarter. Inflation and price rises are likely to be the main focus. At the update in March, there hadn't been a change in consumer spending. However, given that the cost of living crisis has evolved significantly since then, investors will be keen to hear if consumer spending habits have indeed changed. Higher labour costs, food and energy prices will all be headwinds, and there will be strong interest in how this is being managed. Also on Wednesday, we take a look at US inflation with the release of the latest US CPIs. Inflation, unsurprisingly, has been the key focus of the markets and the Federal Reserve in recent months, as it does continue to climb higher. CPI climbed to a fresh 40-year high of 8.6% in May, defying expectations of a pullback. Consumer prices are expected to continue rising to 8.7% year-on-year in May. And the data comes as the US jobs market remains tight, and the market prices in a 94% probability of a 75 basis point rate hike in July. And finally on Wednesday, Delta Airlines are due to release their Q2s. Well, Delta expects to operate at around 84% capacity compared to 2 years ago as the recovery following the pandemic ramps up. Revenues expected to be just shy of pre-pandemic levels, with Wall Street forecasting earnings per share of $1.59. That's a significant improvement from the $1.07 loss reported in the same period last year. Operating costs are expected to rise to around $11.4 billion. That's up $1.2 billion from the previous quarter. Prices are rising across the board, including fuel, as oil prices and wages continued to surge across the quarter. However, prices rise when the airlines are battling for customers amidst a revival in demand for travel. The US bank JP Chase is set to kick off earnings season on Thursday, releasing its Q2 earnings. The results come as the sector trades down some 25% this year, despite rising interest rates. And this is because higher rates are a double-edged sword for banks. On the one hand, rising interest rates mean higher net interest income, but it also means a decline in the market value of bank securities, investments and loans. And one of the big themes this banking season will be how much is being set aside in bad loan provisions. And this will give clues as to how they feel about the outlook and how much is left to be returned to investors. JP Morgan's loan loss is expected to be around $1 billion this quarter. A $30 billion buyback is already in play. And finally on Friday, we'll get an update on GDP over in China. Now, China's GDP for the second quarter is expected to show a slowdown from the prior reading of 4.8%. Some analysts suggest that growth could slow by as much as 1.4% year-on-year growth, which would mark the slowest pace of expansion since the first quarter of 2020. Well, the softer growth comes after months of lockdown restrictions affecting the two most populated cities of Shanghai and Beijing, and with supply chain disruptions affecting the manufacturing hub of the Yangtze River Delta region. Retail sales, manufacturing and services PMIs have shown contraction across most of the quarter. This, combined with rising commodity prices, has prompted the market to question whether China can achieve the official growth target of 5.5% this year. So those were the big stories of the week. Let's wrap up with a quick look at the dividend announcements due this week. In the FTSE 100, we'll hear from Halma. And in the FTSE 250, we'll hear from 91, CMC Markets, First Group, Oxford Instruments, Telecom Plus, Merchants Trust and Supermarket Income Right. So there you have it. It's still all about rising interest rates and inflation. And that's not the only thing rising, with the mercury due to hit 31 degrees here in London today. But don't worry, we're here as always each week, come rain or heat wave, to keep our investors' heads cool. So as always, thanks for watching, and don't forget to click on that subscribe button to make sure you don't miss out on our regular financial updates with our expert market analysis and opinions. Also, if you haven't tried it already, why not download our app to your phone or tablet if you want to keep updated on the latest financial news, as well, of course, as our award-winning trading signals. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.